All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. Starting off the S&P 500, you can see we had a green week here, closing above the 200 moving average, got into this little pivot low, tested it, and then had a little 1, 2, 3 pullback off of that. You can actually see it a little bit clearer on the futures. So right into that pivot, and then a 1, 2, 3 pullback. Ultimately, I still think we're in the midst of some type of an A, B, C kind of move up. So maybe we do a little bit more backing and filling next week, or perhaps we start to move up. But overall, we're looking for some type of a counter trend rally here, and that's just really what we've got penciled in for the near term. Big news this week, obviously, Facebook got absolutely smoked on earnings. So this was down almost, I think, about 30% here from the peak on February 2nd, and closing all the way down at 237 on Friday. So an absolute clubbing of Facebook, which is a $1 trillion company. And, the least I can say here is that this is not normal. This is not a stock that's a mid-cap biotech company that just got shot down by an FDA, body for a cancer drug, and now their stock is cratering. No, this is Facebook. It's, a $1 trillion company. 20% moves in one day are not supposed to happen with stocks like this. And it just goes to show you how fragile the market is. And this really freaked the market out. We went from essentially 420 here and at the lows, and everybody was, the sky is falling, fear, this and that, to basically complacency. And then right as soon as Facebook reported, it went right back to fear. We shot right back down. Huge move down. But then Amazon yesterday came in with the save. So you can see on Thursday, Amazon sold off in sympathy to Facebook. So the Amazon's earnings got essentially priced for, a disappointment. They did not disappoint, and Amazon rebounded tremendously on Friday, up over 13% on the day, and really kind of just saved the market there from what could have been an ugly sell-off. But markets are holding up in the near term. We still have hedges on. The fear and greed index is around 33 or 34. If we look at the VIX, it is still above 20. So it's still holding on. It has come back pretty sharply, but it is still holding up. So the hedges are still there. However, if we do make a leg up in the equity markets, I believe if we take out this pivot high here on the spiders, those hedges will probably come off, and you'll see the VIX come down pretty quickly. But, until that happens, the hedges are still there, and, we can still see some pretty volatile moves because of that. Anytime the VIX is over 20, you've got to be able to expect at least a 2% move in the equity markets on any given day. But anyways, that said, let's flip over to the Dow here. So Dow Jones Diamond has held up much better than the rest of the market. And again, I say this a lot, but when the Dow is leading, it's not a really bullish indicator. The Dow can lead for, a short period of time, not a big deal. But you want to see the NASDAQ and you want to see the Russell leading in order to build a long-term bull case. That's essentially how it goes. The Russell is not leading right now. It was up 0.5% today, did close green on the week. So that's positive, but you can still see how high it is, or how far it is off of the highs compared to the, the spiders or the NASDAQ or the Dow. The Russell is a very weak index right now, and that is not a good signal for risk on. That said, the Russell probably can get up to, I would say, this 210 area on the IWM on another leg up. If we do complete that kind of, B backing and filling and then C move up, I would say 210, maybe 215 is going to be resistance. That's where you broke down from. So usually, stocks like to test those areas. Wherever you broke out of, they like to back test, and wherever you broke down from, that's where you typically look for a move to back test. But in any case, Russell has been the weak link lately, and again, that's not really a bullish indicator. All right, so let's talk about yields here. So 10-year Treasury yield was up 5.6% on Friday. I was pointing out this weekly consolidation pattern, nice little pop, 1, 2, 3 pullback, or 1, 2, 3 inside bar there on the 10-year, and now a pop on Friday this week. Same thing with the 30-year. So nice little move there. We'll see if that continues into next week. And I've been talking about this for a while. I've been saying rates are going to go up, and it's going to put pressure on tech stocks, and that's really going to be the trade really for late 2021 and 22, and that is playing out now. Now, that doesn't mean that rates are going to go up forever. That doesn't mean that they can't go lower, or the Fed can't push them back down, or they won't renege on their policy. But in the near term, the point is, this whole long bond, long tech trade just got way overdone. I mean, you just look at the triple Qs, for instance. I mean, this is just, an insane move. Look at the, this is your kind of general trend, right? If this is kind of your midline of this whole, bull market, I mean, this is just an absolute deviation from that, to say the least. I mean, this was just overdone, market on steroids. And, rates had to come back in, and they do have to come back, they do have to retrace. That doesn't mean that they can't go lower eventually, but this, this whole long tech, long bond trade, just got way overdone. And when markets, do things like that, they need to essentially revert to the mean. And that is what we see historically. That's what we see happen every time. And this is really no different. But anyways, rates getting a nice little bit here. So 10-year, do expect that still to get up to 2%, possibly 2.1 in the near term. And then the 30-year, maybe 2.3, possibly 2.4, but definitely 2.3, 2.3 and a half. Maybe over the next couple of weeks. That is essentially the target there. Let's talk about financials here. So we'll go through that. So XLF had a nice week again. Reclaimed its 20 moving average, so now you're back above all 4 major moving averages. Financials have been holding up well, again helped by the higher yield, so no surprise there. Broker dealers also reclaiming trend above all 4 major moving averages. Got back above this trend line, and that was a key area of resistance for it. Just blew right through it, and broker dealers holding up very nicely. Morgan Stanley, one of the names that stands out here, has held up really well even despite the market being basically over 10% off all-time highs at one point. And it has just held up really well and is getting close to new all-time highs. So, again, if the market does have a leg up and financials continue to outperform, this is a name that can possibly get back up to all-time highs. Wells Fargo, same kind of deal. Bank of America has had a nice run as well. So some of these fins are, pushing 52-week or all-time highs here, and they've just been a strong sector right now. So let's look at energy. So XLE made another 52-week high today, and I said that it was probably going to get up to, we talked about this necktie here, got through that. It can get up to 75 still. However, on the daily, the last couple of minutes, last 10, 15 minutes really of the trading day came way off the highs. So we printed a little bit of a topping tail here on XLE. You can see the same thing on the XOP as well. So made 52-week highs and then came sharply off of that. So, maybe we do see finally a little bit of a pullback here. I mean, look how overbought, short term this is. So it wouldn't surprise me to see a little bit of a pullback here. OIH did not get as extended, didn't have that kind of topping pattern there, but overall energy is still very strong. But that may be a little bit of an indicator that it does want to pull back a little bit, at least in the near term. I mean, your logical downside targets, first you'd have support right here around 65. If you get through that, you got probably about 62, and then these pivots here and this previous trend line, which extends quite a ways back. So it wouldn't surprise me to back test that, at some point. But, energy has been a strong horse right now, and we'll give it the upside bias. Now, let's take a look at crude, because crude's also kind of confirming that. Although it is still moving around in the after hours. It was lower earlier, but I just drew in this little trend line. I actually didn't even have this on my normal daily analysis video. This is something I just was working on earlier. And so you do have a little bit of a broadening pattern here. And again, pretty overbought. Not necessarily extended, but you're pretty overbought short term. So it wouldn't surprise me to see at least a pullback to 85, 86. And if you get through that, it's probably down to about 80 bucks, at least in the near term. But again, energy's been strong, and there's nothing to say it can't get to 100 bucks. When you get this close to a whole round number like that, like 100, and you're already through 92, we got to above 92 today. A lot of the time the market just wants to go up there. It's like a magnet, it's got to go up there and test it. On the downside, however, if we somehow reverse, and we have a major reversal, this would be your major buy level. So this lower trend line there, and that is upsloping in the mid 60s. That's a long way down. I'm not saying it gets there, but if for some reason it were to reverse sharply, have a high volume sell-off, high volume reversal, that would be your absolute major support. But outside of that, more near term, we're looking at 85, 86, and then around 80 as well for spot crude. But anyways, energy, again, still continues to be strong and continues to be the strongest sector in the market. Let's take a look at nat gas. So last week we talked about, this pop here. And then, Jason talked about it on his channel. I talked about it, This was clearly somebody shorting, probably a government or something like that, that just doesn't understand liquidity, because there's only so much liquidity in the market on any given day, right? Hedge funds can't just dump all their shares of Apple all at once. They have to sell it. If they wanted to exit a position, they have to, it takes weeks to sell it, right? Well, nat gas, any asset's the same way. So this is clearly an amateur who doesn't know what they're doing, and just clearly put a market order to sell a ton of contracts of nat gas, and it caused a crash. And then we had a little squeeze about a week later. Got all the way up to this trend line. Remember this old trend line I had on here? Pretty cool to see it come up there and backtest that. And it looks like somebody did the exact same thing again on Thursday, and then we got a little bit of follow through today. But this is actually just kind of comical at this point, but that's the nature of it right now. Let's take a look at the weekly here. So got up there, big reversal there. Nat gas has just been all over the map. It still has bullish fundamentals, but there's nothing to do with it, especially from a swing trading perspective right now. Just leave it alone, because there's no pattern. This is all over the map. Like I said before, it's trading like an altcoin. It's just all over the place. I would just avoid it until it starts to shape up and starts to give you like a real pattern. Then we can look at it. But for right now, just total messy chart, but very entertaining to watch. So let's look at the dollar. So dollar started to break out last week and then pulled back pretty sharply this week, got back to that 100 moving average, bounced a little bit on Friday. On the weekly time frame, you had a little bit of a reversal here. So, a lot of generally you'd look at this and be like, okay, well, it was a fake breakout. And you'd expect to move much lower. However, you just go to your bigger time frame and you look at the dollar index, and we still have a bullish inside bar here on the dollar. And we're only 4 days into February. So we got a whole month to play this out. But as of right now, there's nothing broken. There's nothing wrong with this pattern. It's still holding up just fine. Now, if you get below 93.81 and close below that for the month of February, then it's going to go a lot lower very quickly. But for right now, it's holding up just fine. Little strange to see it not moving up with yields. Yields did get a bid here today, again, off the jobs report. So market is starting to price in basically the Fed being under pressure to hike rates a little bit sooner. So yields got to pop, and the dollar did not pop. Part of that has to do with the euro. There was talk about the ECB hiking rates, which I completely don't buy, but essentially that's what's going on right now. But the big picture is that the monthly time frame on the dollar is pretty solid, and there's nothing wrong with it. If that changes, I'll be the first to let you know. Anyways, let's move on to gold here. So gold did really a whole lot of nothing this week. Did come off the lows a little bit. You're still kind of have an inside bar here. I'm not really in love with the gold pattern right now. Again, the major areas here, you just got to watch this pennant. So nothing new to report there. Same thing with silver, kind of just coming off the lows, but just chopping sideways inside of this red candle. So I'm not in love with gold and silver right now. However, platinum does have a really nice chart. Nice little pop here, and then you're just consolidating sideways. Maybe it needs to do, I would say maybe one more week at least of consolidating. And then if it does that, it can get up to that 1100 handle. But the longer it consolidates, the farther it can go. But there's nothing wrong with this chart right now. And palladium, after that monster move, is starting to do some backing and filling. This probably needs to retrace at least that 2200 area, or at the very least, it needs to let that 20 moving average come and catch up to price. But nice move on palladium, and it is starting to consolidate a little bit. So looking at copper here, just flirting with that 451 resistance I talked about. Got just shy of that. I doubt it gets there. It's about 6:15 right now, so there's 2 hours left of after hours trading. I doubt it gets above that level before the after hours close. But if you look at the weekly, it's holding up really, really nicely. I said that, previously I would have liked to have seen it break out by now, but hey, if it breaks out next week, it breaks out next week, and it's got upside to 4.8, possibly up to a double top here. And again, if it closes below 425 for whatever reason, it goes a lot lower very quickly. All right, so let's flip over to crypto. So crypto finally did something. So it's been kind of sideways for really 2 weeks, putting in kind of like a bear flag, but now it's starting to reverse that. So we may have a failed bear flag. Basically, the level you want to watch here is 41,116 on Bitcoin. If you can close above that, you'll go right back to 44, 45,000, and you will test this trend line. So that's the level there. On Ethereum, also up nicely, 9.5% now. Same level, same thing. If you close above 30, 34, then it's probably going up to 3,400, maybe 36. So crypto shaping up a lot better here. Really just today, but it was really in a tight range, not doing a whole lot, and just kind of sitting there. But now starting to move a little bit, and this still kind of supports my theory here that we do have another leg up in the markets. Maybe not, maybe not necessarily next week. Maybe we got to chop around a little bit. But I do think we have at least one more kind of leg up to complete an ABC kind of up pattern. And if crypto is starting to get a bid, that's probably supportive of that theory, because at this point, crypto is basically essentially a levered ETF to the stock market. So it's trading positively correlated to the stock market. And if crypto gets a bid, that's probably a bullish signal in the near term. Now, keeping that in mind, that does not mean that we just rip to all-time highs and continue this massive, ridiculous uptrend that we've been in for the last 21 months. I do think that there was major technical damage done to the chart. And after, an ABC up, we probably will see, at the very least, a retest of the lows. I'm thinking sometime possibly in March. But, for the near term, the market is holding up, and the charts are, telling me to give it an upside bias for now. Anyways, guys, thanks for watching. Leave the video a like, subscribe. If you like more content like this, come check out Jason's Patreon. Come check out carnivoretrades.com if you're interested in swing trading. Outside of that, you guys have a wonderful rest of your weekend, and I will talk to you all next week.